The Bank of Canada lowered its benchmark interest rate by a quarter point today as the tariff battle with the United States starts to weigh on the Canadian economy. The policy rate stands at 2.75% after the central bank's seventh consecutive rate cut.
Today, we lowered our policy interest rate by 25 basis points to 2.75%. The Canadian economy ended 2024 in good shape. Inflation has been close to the 2% target since last summer. Substantial cuts to our policy interest rate through the second half of last year boosted household spending and strengthened economic growth. However, in recent months, the pervasive uncertainty created by continuously changing U.S. tariff threats have shaken business and consumer confidence. This is restraining household spending intentions and businesses' plans to hire and invest. Against this backdrop, and with inflation near the 2% target, the Governing Council decided to reduce the policy rate a further 25 basis points. Looking ahead, the trade conflict with the United States can be expected to weigh on economic activity while also increasing prices and inflation. The Governing Council will proceed carefully with any further changes to our policy rate, given the need to assess both the upward pressure on inflation from higher costs and the downward pressure from weaker demand.
Experts say that it would cushion the economy against new tariffs, as America's new trade war with Canada has been dampening consumer and business confidence. Economist Dr. Moshe Lander joined us earlier for more on the announcement.
This is the seventh cut in a row. So we're now about 45 weeks into continuous interest rate cuts. It's mirroring the interest rate increases we saw a few years ago. It's just not as steep as it was going up. But the Bank of Canada clearly feels that inflation is under control for now. They're clearly worried about the state of the Canadian economy going forward with the tariff threats and the counter threats and just the uncertainty. So the interest rate cut this time was widely expected, but I don't know necessarily that I agreed with the timing of the cut. I thought that they could have held off for a little bit longer, but the Bank of Canada clearly feels that even if the tariffs do come into play, there's no immediate threat that this is going to push inflation above the 3% comfort zone. You now have an overnight rate that's at 2.75%. So to me, the floor really is probably around 2%. You could go below that. You could go as low as we had it in the worst of the COVID days, but I don't know that they want to go down to that level. I thought that at the beginning of this year, they had 4 interest rate cuts left in them. They've now already used up 2 of them. So there's maybe 2 left, and then we're starting to brush the bottom of where I would feel comfortable with the Bank of Canada going before it starts to signal that something's really wrong. To me, if they had held on to this interest rate cut, there is no inflationary pressure. The economy grew strongly at the end of last year, but I think there was a lot of businesses racing to get inventory across the U.S. border in anticipation of tariffs that were coming, rather than was a real sign of the Canadian economy's strength. And I think what we're going to see now is with the increasing uncertainty, business plans are going to start to go sideways. There's news coming out of Quebec right now that Northvolt has filed for bankruptcy. That was going to be a huge investment in Quebec for battery plant development. And that in itself is probably going to get canceled in Canada because of the uncertainty around the tariffs, more than just that the parent company has filed for bankruptcy. I think we're going to see more of that happening. And if these tariffs come in and they're increasing from 25 to 50%, or they're going back to 25%, or they're being suspended for a month, businesses are going to start to say, I can't do this anymore. And so whether they decide to just move to the US to avoid the tariffs going forward, or whether they just suspend any new projects until there's clarity, those are the types of things that can drag the Canadian economy down. But at the same time, the tariff threat does run the risk of spiking inflation. And so when the Bank of Canada is trying to look at this data, they're going to have a really difficult time trying to balance the two tensions, that one part of the story is clearly inflationary and the other part of the story clearly isn't. As long as they don't feel that there's inflationary tension, they can cut interest rates to try and prop up the economy. But inflation can appear very suddenly. And if it appears, I don't know that the Bank of Canada wants to start reversing the interest rate cycle or playing it as a yo-yo where it's up today and down tomorrow. So I think that at some point in the foreseeable future, they're going to have to pause these interest rates to just see which of these two tensions wins out. For now, they feel that the lower tension is stronger than the higher tension, but I just don't see that that's going to be sustainable in the face of all of this changing Trump policy.